Welcome to Blind Spots, a podcast where we're helping you fill the gap between what you want to do with your money and what you actually do. We are professional investors, writers, and financial planners helping you navigate the complexities of finance to optimize what you can control and cut out the rest. Join your host, Nick Schuurmans and Erin Varghese, as we discuss the questions and nuances surrounding everyday money management. Hello, everyone. Welcome back to another episode of Blind Spots. In today's podcast, we are talking all about the emergence of the new Bitcoin ETF and the merits of owning cryptocurrency. So we've been talking a lot about this recently, but we want to continue the conversation because it's a fairly new asset class that has been introduced to the world, and it is now available to own very easily via an ETF. So it is definitely worth a discussion.
Yeah, so I've published a few videos on this, wrote a blog back in 2019. It's an area that we've been interested for a long time, and we've been reluctant to get into it because it's been the Wild West. The SEC has been very slow about what's a security versus what's property. Is a digital asset like Bitcoin, is that a security? Who does that fall under from a regulatory standpoint? It's still not quite where we probably need it to be, but with the emergence of the ETF that institutionalized and legitimized Bitcoin as kind of the blue chip digital asset. And this is probably I don't know if I can say this, but 3 out of 5 steps for us introducing this into our core asset allocation. And I've said many times over the past couple of years that it was only a matter of time before Bitcoin became a staple in a retail investment portfolio. And Bitcoin's following a similar arc as gold back in 2004, where gold, before 2004, which was the mark of the first gold ETF, it took a lot of intention, a lot of effort to own gold. You had to own physical bars. You had to store it. It's not a direct parallel to Bitcoin, but there was a lot of friction to own Bitcoin pre-ETF. Now that friction is washed away. We are going to share some use cases for Bitcoin. We're going to share some frequently asked questions that we're getting from prospective clients. And hopefully at the end of this, you'll have a better picture of where this could potentially fit in your investment portfolio.
So there is a lot of confusion around Bitcoin itself, cryptocurrency, what it is, how it works. A lot of people are hesitant because there's a lot of information out there about, fraud and scams, and it's used for, purchases on the black market and things like that. So I understand the hesitancy that people have because it is brand new and there's a lot of, new vocabulary that comes along with learning about this new asset. So we've had a lot of education that we have been going through here at Pure Portfolios. And there is an anecdote that I wanted to share that I think kind of brings just new technology and the new adoption of anything can be kind of a weird and scary idea. And so I heard this anecdote on a educational webinar that I listened to the other day, and I think it just adds some perspective. So thinking back to 1991, that is when the first webcam was introduced. And if you're watching this podcast on YouTube, we are recording it on a webcam. It's a part of almost all of our daily lives now, but this was, of course, a brand new technology that came about, 30 years ago. And when the first webcam went live, the original use for it was set up in an office somewhere, and it was facing a pot of coffee, like in a kitchen, so that the people in the office could look live and see if the pot of coffee had coffee in it, if it was worth their while to walk over and get coffee or not. Because this was live, it was broadcasted around the world, and people all around the world were tuning in to look at this pot of coffee, which sounds absolutely ridiculous. But oftentimes new technology and new ideas have a silly use at first to get people comfortable with this new idea. Fast forward to 2020, multi-billion-dollar corporations were able to stay afloat because we had the use of webcams. We could talk to each other live from all of these different remote locations. the workplace has changed dramatically since then, and it's because of these new technologies that we're able to do these things. So I thought that it was just kind of an interesting, not really a parallel to draw, but when new things come about, it can be just difficult to understand at first. So there are some funny things that Bitcoin has been used for. It's going to take people a while to have wide adoption of this for it to become a regular currency that maybe people are using in their daily lives. And of course, we're not there yet, but I just thought that it was kind of an interesting story that they used.
Well, and to your point, if we as advisors going back 30 or 40 years shrugged off gold or the securitization of real estate or technology stocks or AI or machine learning, now cryptocurrency,
Yeah.
I think shunning it off is the path of least resistance. It takes zero effort to call something a fraud or call it a fad. But when you competitively sit down and think about Bitcoin, the long-term thesis of Bitcoin, it has played out right in front of our eyes. Reckless government, monetary policy experiments, debt, a debased fiat currency like the dollar, bureaucratic banks that are fleecing people to access their own money, clumsy payment systems. And you can say whatever you want about Bitcoin. There's certainly, I've said this before, a lot of smart people that don't like Bitcoin or the idea of digital assets. At what point do they capitulate? Because it's been an overwhelming success. Bitcoin launched as nothing, as this magical money trading for cents on the dollar. Now it's 43,000 a coin. I mean, if you were an early adopter, you're a multi-millionaire, maybe even a billionaire. And I draw a similar to conclusion to Tesla. For me personally, I never really liked Tesla. But when you zoom out and look at early believers in EV cars and Tesla, they've made a ton of money. So I have to tip my hat to them and say, okay, you were right and I was wrong. But it just seems like people are so entrenched in their views and so rigid in their views, they're not able to change their mind. So again, we're not trying to change anybody's mind. We're trying to give you information to make the best decision for yourself.
Yeah, and leading up to the launch of this ETF, I really didn't know much about cryptocurrency or Bitcoin itself. And I've just barely started to scratch the surface in terms of education, because this goes deep and wide in the amount of information that there is to learn. But I think that if people are at least open to learning and understanding, then you can make an educated decision of if this is right for you or not. And as advisors, we have the fiduciary duty to do what is right by our clients. And a year ago, it was easier to just, like you said, shun it and just say, oh no, don't worry about that. It's, wrong for XYZ reason. But if your advisor isn't even talking about it, they're doing a disservice to their clients. Okay. Yeah. So let's get into the frequently asked questions that we've already started to receive from some of our clients. So let's just start very basic. What would be the purpose of owning Bitcoin? What is it, and why would someone want it in their portfolio?
For one, up to this point, it has not been correlated to traditional stocks and bonds. So I dug into this in my last Bitcoin video, but as asset allocators, we're always looking to optimize or improve the risk return framework. And if I can add an asset class, it could be any asset class, to a traditional portfolio of stocks and bonds, let's say, and it improves the return profile while keeping risk the same, or it keeps the return the same and lowers the risk, then that's a good trade. That's a additive asset class to that portfolio. And Bitcoin certainly has done that, especially on the return side. I'm not sure what it's done on the risk side, but it might have increased the return profile while also increasing the risk profile. But the return portion of it has increased more than the risk portion of it, if that makes sense. Bitcoin has been a juggernaut from a return standpoint. It's also been an extremely volatile asset class where 50, 60, 70% drawdowns are not uncommon. Bitcoin's all-time high is something like 60,000 or so. Right now, it's hovering around 40,000. So that's a 33% drawdown from the all-time high. So it's not for the faint of heart, but it's certainly additive from a return risk profile when coupling it to a traditional stock and bond portfolio.
One of the arguments against is that it's not physically backed by anything. It's hard to put a value on it. So, in thinking how it fits into a portfolio, how does one place value on Bitcoin or know what to pay for it?
Well, the easy answer is the free market decides what a Bitcoin is worth. And you can say loosely, well, gold is a physical asset. So this is where the new paradigm comes in. And I think you trade off a physical store of value, like something tangible like real estate or gold, for the decentralized nature of Bitcoin. And what I mean by that is no single entity controls Bitcoin. No bureaucrat controls Bitcoin. The government doesn't control Bitcoin. It's a understanding between two willing parties decide the price of Bitcoin. And every transaction is on the public ledger called a blockchain, where you can see exactly what Bitcoin traded for, where it was sent. So it's a verifiable public ledger that is available for everyone to see. It's fully transparent. No one can change it. No one can tweak it. So that's the appeal of Bitcoin. It's a decentralized way to move money between parties.
Let's talk a little bit about environmental concerns, because there's a lot of people that bring up that argument when it comes to mining of Bitcoin and things like that. So what are your thoughts in that aspect?
I don't really have much to say about that. Like I'm not educated on the environmental impacts of Bitcoin. I know there's narratives out there. Some have been debunked. Some might hold some merit, but I'm really not qualified to understand the full environmental concerns of mining Bitcoin. I know that a lot of Bitcoin miners will domicile in areas of the world that are cheaper to produce energy. The cost of energy is cheaper, either because it's abundant, because it's close to a natural resource, or it's just not a populated area. Mm-hmm. But I certainly can't comment on the long-term impact of climate change and Bitcoin mining.
I don't know that anyone really has an answer to what that looks like. How about fraud or any kind of illicit activity? I've got some numbers to throw in here for this one, but that's the other, when people hear the word Bitcoin, they're like, heck no, absolutely no way, not for me, because of those reasons.
Yeah, that's a popular narrative, and I see you've got a stat here that Bitcoin is used in fraud, if I'm reading this correctly, less than 0.2% of all transactions. Is that correct?
That's right. Yes, that's correct.
Interestingly enough, the US dollar is probably the most popular medium of exchange for fraud. Mm-hmm. So it's kind of interesting that the naysayers talk about Bitcoin being a tool for illicit activity, and certainly there's no medium of exchange or no currency that can completely eliminate human greed.
Right.
But the dollar by far leads any fiat currency or any global currency to fund illicit activities or what am I trying to say here? Fraud or illicit activity. So the dollar is the leader in the clubhouse, not Bitcoin.
Yeah, and I thought that this was interesting, so I wrote it down, is that it's less than 0.2% that where Bitcoin is used for those purposes. In comparison, where the US dollar is used for fraud and the same kind of activities, it's 3 to 5% of the world's GDP is used using the US dollar. So if you come in with the argument that I don't want to own Bitcoin because I feel like I'm supporting, these wrongdoers that are using Bitcoin for this purpose, at the same time, you should say, I'm not going to use the US dollar because of those purposes as well, and even more so. So it's kind of one of those false narratives, I don't know, fake news, if you will. But I thought that was an interesting stat.
Now, where this could potentially come in is before the Bitcoin ETF, it was really difficult to buy, store, send Bitcoin for the average user. And it wasn't uncommon. I mean, you saw it all the time in the crypto world where wallets would get hacked, exchanges would get hacked, the exchange owners were bad actors. So it really was the Wild West, and it still is. I think the advent of the ETF strips out a lot of the confusion, a lot of the friction, a lot of the barriers to entry for owning Bitcoin. Again, you can log onto your brokerage account at Schwab and buy Bitcoin ETFs. There's really no risk of fraud or bad actors getting into your wallet or stealing your Bitcoin. So that's why the emergence of the ETF is such a big deal. It basically knocks down the walls for the average person that maybe is not tech savvy to own Bitcoin.
Yeah, so you just rattled off a lot of the pros of owning the Bitcoin through an ETF. Let's talk about a couple more. So one, like you said, is the convenience and availability of owning it through an ETF. You can log into your brokerage account. You can buy and sell it very easily where that wasn't the case before. Along with that, we always talk about simplifying your finances, simplifying your money, rather than having your 401k in one place and your IRA and Roth and brokerage account at another custodian, and then maybe you have digital assets held somewhere else. Now you can hold it all together. So it really consolidation, ease of holding it all in one place. Right.
It simplifies the entire process. It's all in one place, custodied at a reputable firm, a publicly traded firm, perhaps. The ETFs, and I think this is important, actually owns underlying Bitcoin, right? So, a lot of some ETFs like gold might own paper gold or a claim on gold. These ETFs, these Bitcoin ETFs actually own underlying Bitcoin, and they're stored in a off the internet wallet called a cold wallet, meaning it's very secure. And with a lot of these exchanges, they are like Schwab, they are protected against cyber hacks and breaches and fraud. So there's extra layers of protection owning it in a ETF wrapper.
I think that point is important too, because you hear of these, people who lost the flash drive that they were holding their Bitcoin on, and they know that it's in a garbage dump somewhere, and so it's worth millions of dollars, and so they're just rifling through all of this garbage trying to find flash drive. And I heard somewhere it's estimated that more than 4 million Bitcoins are just essentially lost forever because of instances like that, which means that once all of the Bitcoins are in circulation by the end of this decade, that would leave 17 million left, because it's 21 million total. Is that right?
Yep. Yeah, and anyone that's owned digital assets, and I've had this scare, if you change laptops and you misplace your private key, meaning it's basically the key to your wallet, which holds all your coins, it can be a very stressful thing. And again, the ETF washes away all of that, and eventually, most of the larger digital assets like Ethereum or Solana or Avalanche are all going to be available via ETF, which again is a good thing for the retail investor.
So another pro to owning Bitcoin via ETF is the tax side has been simplified a little bit now as well. So there was a lot of back and forth with how taxes would be handled. Digital assets are right on the front page when you file your taxes now. It's one of the first questions that they ask. I think it's on your 1040, is do you own digital assets? So now owning it via ETF, you will receive a 1099 at the end of the year. It's very easy to report. There's no questions, no ifs, ands, or buts about it. And that just helps simplify and streamline taxes where digital assets are concerned.
Yeah, and that's one of the biggest surprises from the SEC and the government standpoint, why they were so slow to do this, because one of the pushbacks from the regulators was people weren't paying taxes on their digital asset gains. And I think this is a step in the right direction to regulate it, to track it, to get it on the tax radar. If you look at Coinbase, like I just got a little notice that said, hey, you've got some taxable income for your digital assets this year. Like that wasn't a thing a couple years ago. So with the advent of the ETF, the reputable exchanges emerging from the rubble, like Coinbase, taxes are going to become a lot easier, which is great for the investor, but also great for the government and the IRS.
So that was a lot of positive about owning Bitcoin via ETF. Let's talk about some of the potential drawbacks of owning via ETF. One of the webinars that I listened to was from BlackRock, and of course they have their own ETF. They're trying to pitch all of the wonderful reasons why you should use theirs. But I was able to jot down some cons that they did present, about owning via ETF. So one of them is the difference in trade timing. So on the blockchain, the market never closes like our traditional stock market does. So there's this idea of kind of this never ending liquidity. You can log in at 1 a.m. and trade your Bitcoin if it's not held via ETF. If you're holding it with a traditional custodian, you're still going to have those open and closed market hours.
Well, and this is more mental than anything. So I've had a few friends with a pretty sizable position in Bitcoin. And since it's always trading, they're checking their phones nonstop. They're checking the price of Bitcoin nonstop. And a lot of them couldn't sleep. They were anxious. They had anxiety. I mean, that's really no way to live, but that's the world that we lived in, especially during these crazy boom bust period for cryptocurrency. So as this asset class has emerged and slowly matured, I mean, some of the swings that we saw during COVID in 2021 were absolutely bonkers. And it really does. You literally can't turn it off. So for those that have a tendency to want to do something or trade, it might not be the best idea to own any sort of digital asset, either ETF or the underlying currency.
Yeah, that's an interesting kind of aside on that, is just the mental part of it.
Oh yeah, it's very real.
Another con that they brought up that they kind of twisted around to be positive was for those who are already invested in Bitcoin in the traditional way, if you have a large capital gain, you are likely not going to be motivated to sell it, because then you would have to pay a capital gain on selling that in order to kind of turn it into an ETF. So that is one potential drawback of if you own just Bitcoin on its own and you want to turn it into an ETF, there is a transition process that could potentially come along with capital gains.
Well, and the counter to that is if someone has a large gain in Bitcoin, you could surmise they were an early adopter, and these early adopters are super intense.
Yeah.
And the idea of them taking Bitcoin stored in their own cold wallet that's secured and putting it on a centralized network like a Schwab goes against the Bitcoin maximus theory of decentralization, and no one can touch my money, and this is mine. This is
right
on a decentralized blockchain. I don't want any central entity to tell me what to do. So I don't know if that's a thing. It might be a thing if you're older or you don't want to fuss with it, or you want it in the context of where most of your assets are. But a lot of these Bitcoin maximists, they would lose sleep over the very thought of that. Let's talk about the price movement of Bitcoin, because I think that is potentially a con. And Bitcoin Bitcoin can sometimes move up or down, and it makes 0 sense. So again, 24/7 trading, global asset class. This is not traded just on the US exchange or a Chinese exchange, but it's traded 24/7 across the globe. We're talking billions of capital. I think Bitcoin as it stands now is a $700 billion or $650 billion asset class.
Crazy.
And think about all the buying and selling going on. So the price movements might not make sense. It's certainly not for the faint of heart. If you're not prepared to lose everything, you should not be investing in Bitcoin. And that's not what I'm saying is going to happen, but some of these swings can be rather wild. And again, if you're trying to explain away why something is happening, you might end up with egg on your face.
Well, and we always talk about understanding the potential outcome of what you are investing in, no matter what it is or how much of it you own. So I think that's an important takeaway.
So if you're going to own Bitcoin, either an ETF or the actual coin outside of a centralized Schwab or Fidelity, make sure you're very aware of position sizing and that you have a framework for making decisions, right? It shouldn't be something that's traded on a whim. It shouldn't be something that's down 20%, you freak out and sell. If that's your behavior, you probably shouldn't own the coin. But going back to my first comment, position sizing in relation to your investable assets, your total investable assets, is key. Okay, we're coming up on 30 minutes. Erin's going to fall asleep here. She's all fired up for the Super Bowl. She's got the Niners.
Who do you have?
Well, I think the public, like I always think about these sports betting lines as a stock trading hands. The line moves, the market moves. And I think the popular narrative, the public narrative, is Patrick Mahomes and Travis Kelce and Taylor Swift and Andy Reid and this dynasty of the Chiefs. I think that's what most people would pick. So I tend to be a contrarian. So it might be the Niners, but I really don't have a dog in the fight. But I'll certainly be watching.
Okay, and I will preface this by saying I do not know football. So take what I say with a grain of salt. But not that the 49ers are really underdogs per se, but I feel like that's who I tend to root for is the lesser favored team. And I feel like with all the media attention that who's the other team?
The Chiefs and the Niners.
Chiefs.
That's not a good start. Not a good start.
No, with all the attention that the Chiefs are getting, I just feel like that's why I want to root for the 49ers.
Well, and what makes this game weird is the Chiefs are getting all of the attention, but the Niners are actually a modest favorite.
Okay.
So it's a very difficult game to wrap your head around. I'm not a big NFL guy either. Yeah, I play fantasy football, but I'm not sitting down and grinding the numbers and watching all the games. But sports bring people together. I'll be with the group. I'll be happy to watch it. I'm just rooting for a competitive game.
Do you do any like games or, I mean, like, are people doing like serious betting or do you do anything like fun on the side?
Maybe a little bit of both. I'll be in Nevada on a guy's golf trip. I will not be in Las Vegas, but I'll be in a state that gambling is legal. Might put a modest wager on the game, but certainly nothing serious. Again, I just hope for a good game, and I'm going to watch it with some good buddies I haven't seen in a while.
Nice. I usually go for the food. I enjoy that aspect of the Super Bowl get together. Last year we had a little bingo game going on, so as things happened during the game, me and the girls were playing bingo, so that's my plan for Sunday.
Bingo. Okay. I thought you had to be over like 80 to play bingo. But anyway, let's wrap it up there.
All right. Thanks for listening to this episode of Blind Spots. If you have any questions about Bitcoin or anything else, you can always reach out to us at insight@pureportfolios.com, and we will see you in the next one.